Welcome to TheoTrade. This is Don Kaufman. It's December 2nd, 2019, and you are watching the TheoTrade evening video. About 25 minutes to go to the cash close, but I really wanted to detail a couple of specific aspects of the marketplace while we're still effectively open, again, during cash markets. With that, let's get to work over here. So the S&P's right now down, right? But not even to the tune of about 1%. So for those of you that had tuned into this weekend's update, I talked about a very likely turning point inside of the marketplace. And I detailed everything from, well, a couple of different perspectives over here. Number one, we talked extensively about the risk reward, obviously, inside of the SPX, but much more specifically, we talked about the fact that we just passed through literally 17 straight weeks that were pretty much right inside of the expected move. So 17 straight weeks displaying extraordinary efficiency inside of the marketplace. And of course, what everybody's questioning right here, right now, is this going to be the turning point? And that's what I'm going to try to detail over here. You know, our market's about to get really serious. I mean, come on, listen, the S&Ps are down 26 right now. You know, it's not even skinning your knee in this marketplace. If you take a look at the spiders here, I mean, we've been straight up almost day in and day out, okay, since roughly the very beginning of October. To have one down day, let's not necessarily call anything just yet. However, what I do want to provide to you this evening are details that you need to be aware of, because moving forward throughout the rest of the course of this week, if things are going to get just downright serious, I want you to know what to be looking at, right, to distinguish just that. So as we start to look at the S&Ps, all right, first and foremost, the S&Ps really kind of caught some sell-side activity almost pretty much at the cash open, but it did not start inside of the S&Ps. If you want to get really specific, we actually started inside of the Nasdaq seeing some sell-side activity, and it effectively proliferated, to various parts of the marketplace. Now, one of the things that's just not there in this sell side just yet, now bear with me because this is critically important, I want you to take a look with me here at the S&P 100 advanced decline line. In fact, this is one of the reasons that I'm recording this while the marketplace is still open, is to get a better read on this. The cash close, neither here nor there. But during this trading session, you're looking at this, there's still 22 advancers, 76 decliners. You're like, so what? One of the things that we have to start to call this, just a downright wild marketplace, that ain't correlation. You need to see at least 90 stocks trading to the downside. You got to see 90 plus stocks. 92 and 93, that's what we kind of term full-blown correlation. Now, you can look at this as both a positive and a negative. Now, as I'm saying this, again, there's still plenty of time on the clock today, right? Marketplace could still rally back up. Push all of it aside. I'm telling you, right now, where the S&Ps are trading, that's the furthest thing from my mind. I don't care. We just have to start to define if this marketplace has truly kind of hit that inflection point, the turning point, where we're just going to get downright hideous. Now, looking at this advanced decline line, I'm going to give you one of two different things. First of all, when you're fully correlated, that's kind of what I kind of term a full court press. That's when you can start to see some hideous down days. But there's a bigger issue in play. You realize that the S&Ps are down right now almost 1%, and there are still 22 advancers. Now, look at this, from the dark side, there's a lot more products that you could hit along the way. I mean, you've got stuff still like Altria Group. This thing's up by 1.7%. There are pockets today where traders are effectively running to and buying. Now, to kind of further that, right? Let's actually move away for just 1 second from that advanced decline line. By the way, the advanced decline line, listen, if we see high degrees of correlation at the cash open, tomorrow, or all of a sudden we become correlated, you're going to know it's a lot more serious in a hurry, right? But push that aside for just a second. Next aspect that you really have to consider, the financials. If you're not looking at the financials, you are absolutely, unequivocally, you're missing the bigger, broader picture. And I'm actually freezing the screen over here. I don't even want to see the option chain right now. What I want to display to you, okay, is on a percentage basis where the financials are right now. They're only down 0.5%. Again, they're down 0.5% with the S&Ps down 0.8%. Why am I detailing the financials? I mean, first and foremost, what led this marketplace, okay, to this rally the last 2 months is none other than the financials. I mean, the financials, just a couple of weeks ago, were up basically 10% on the year. Now they're up 25, 26% on the year. They are getting through this trading session almost completely and utterly unscathed. So now, not only are we looking for this correlation property to kind of grip hold right in the advanced decline line, but we have to see the financials not selling off. We need to see the financials on a percentage basis. And I'm being really specific here. They need to be leading to the downside. And there's a reason that the financials are not necessarily leading to the downside. That actually takes us over to the bond market. Now, the bond market, this stands in precise contrast to what I would have expected this week. Okay, if you listen to the weekend video, I am personally and still looking for an up move in the bonds. Why? Because what I anticipated was some sell side activity to kind of grip hold, right? When some sell side activity grips hold, what do? They run into the bond product. You're not seeing that right now. So and take it for what it's worth. At this point, all we have right now, okay, is just a down trading session. That's it. Nothing more, nothing less. I don't want you to be like, I'm on the edge of my seat. Well, you should be, but you have to be looking at the proper, aspects of the sell side activity in the days to come. Because right now, you are at kind of a tipping point inside of the markets. All right, we're shifting. We know that the range is picked up. Okay. What we aren't seeing, though, the financials need to be the leader of the pack to the downside. Okay. Forget about tech for a second. Tech may have actually sparked some sell side activity, but I'm going to tell you right now, tech ain't going to get it done. If this marketplace is going to get hammered, it has to be done, again, on the back of the financials. And the financials need to feel literally need to feel like they're almost snapping, in an instant. I will say this, though. The financials, the volatility in there has picked up. You're looking at almost a 50-cent expected move for the remainder of this week. All right. Let's actually continue on over here. So the financials. I mean, by the way, speaking of the financials, you gotta look at this for a second too. Take a look at Bank of America, J.P. Morgan, Citi. I mean, you realize Bank of America, it's still up today. I've got positions all over this thing. Stock is up today. It's up, on a day where the S&Ps are down 25 handles. Again, that's not exactly fear and loathing inside of the broader market over here. So when we try to answer that question, did things get serious? Well, apparently not inside of the financials. And that's what it is going to take to see the marketplace just get downright ugly. So I, want to bring you to the idea, if you start seeing selling in the financials, that is when the bonds will start to rally. Speaking of bonds, they did monumental volume today. All right, skipping over here and continue. Emerging markets rather unscathed inside of trading today, relatively flat. You'd also want to see some sell side inside of the emerging markets along with the financials. Next one on the list is VVIX. That's the volatility of the volatility index. It's spiked up, but we're not hitting anything critical. Like the VVIX, it's not at 100. I'm not feeling the fear, people. Okay. Now I'm going to bring you into one thing that might make you feel the fear a little bit more. Let's actually cruise back over to the SPX. Again, right, in effort to try to describe, a much more serious marketplace, we're going to look at the expected move. And one of the things you really want to consider is here's the expected move for the entire week. Now, what this broke down to, we were looking for a $37 move either higher or a $37 move lower. Okay, which takes us right down to here. By the way, what's here? It's somewhere right around 3104. Let me actually put it on your screen. All right. 3104. That would be the lower edge of the expected move of the week. So tomorrow, when the markets open, if we are to crack below 3104, that would start to see proliferation to sell side. You would actually see things really start to break down and possibly accelerate to the downside. I would keep that number. And again, it's very specific to the SPX. It is more about the SPX than it is, okay, about, of course, the S&P futures. Though the S&P futures are trading in almost right now lockstep with where the SPX is. But right there, again, 3104 inside of the SPX. We get below it, and then you're going to see some real heavy sell-side activity in there. All right. Is it going to, I mean, the big question is, if we smash through the edge of the expected move, at that point, do we get like a 3 sigma style move, which is a move that would be effectively $37, okay, times 3. Like a 3 sigma type move is, 3 times the expected move out there. Getting downright nutty. All right. Last but definitely not least, I've opened and closed a couple of positions inside of today's trading session. We had an in-out spread on Roku. Okay, we're out. There was a huge downgrade on Roku. It was a bearish spread. We're out of the bearish spread in Roku. We've got a bearish spread on an AMD. If you haven't looked at AMD, some sell side activity. This one, okay, we're still in it, but we're kind of hanging on by a thread. It's when I say hanging on by a thread, this thing is very close to be closing on a profitable position. All right, so you can see my spread almost completely in the money there in AMD. Next one on the docket, XHB. I've got a lot of different positions inside of XHB, but XHB right on the dance floor for starting to hit varying degrees of profitability over here. The trade is up about 20%. Okay, looking for a close at about 55%. And then last but not least, XLV. In terms of XLV, this is the healthcare sector. I've started to initiate new positions in the healthcare sector, 39 days out, in-out spread. This is and happens to be a bearish trade, again, specifically on the XLV. By the way, talk about a wild percentage gain. Just a few weeks ago, this thing was massively unchanged on the year, up about 17%. This is the first decent-sized pullback, though, that we've seen. And it's such a nominal pullback today. Look at this thing. It's down 26 cents, what, 0.25%? Listen. The S&Ps, okay, things got rocking today. I mean, we made a little bit of damage to the broader marketplace. Now the question is, hey, is this volatility really going to start to pump in here? They're going to take the bait. Remember the different factors that we just looked at, right? I'll recap them. Correlation, right? Is it going to be there? I want to see 90 products on one side of this. You hit 90 products, you're going to feel the fear. Next one over there, that's really big one, the financials. Are the financials kind of leading or are they lagging? They need to be leading to the sell side if we're going to see markets really come down and come down hard. I want to see the VVIX. The VVIX has got to get north of 100. People, it's on the dance floor, right? It's on like 97. But we ain't home yet, not by a long shot. And then the last but not least, okay, will the bonds start to rally if those financials start to sell off? Again, a lot questions inside of this marketplace, most of which is going to be resolved really in just the next couple of days of trade. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.